Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me is my co-host, CoinDesk managing editor of Global Capital Markets, Lawrence Lewitton. Lawrence, happy Valentine's Day.
Thank you. Thank you. I expect to find those flowers and chocolates when I open my door later on today.
Ooh, that's a nice wife of yours. I am seeing a bit of red. Let's check in.
I was expecting it from everyone else, but yeah.
Let's check in on the crypto markets. I'm seeing some red candles right now. 42,471 on the CoinDesk XBX index right now. Bitcoin is down about 0.1%. The ETX, CoinDesk Ether price index right now at 2,932, below that $3,000 threshold. ETH is retreating about 0.3%. And the DFX, CoinDesk's DeFi index at 285, DeFi trailing behind by about 3%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. But our top story, Lawrence, was the Super Bowl, and it did not disappoint. Yeah. I mean, some of your favorite moments.
I'm sorry. Well, I look, as somebody, I was in a weird situation, but I did get to watch part of the game, at least while I was on a flight back, a very delayed flight back from Florida.
And well, the markets went down despite it all.
Yeah, it's like I think basically what we had is not, it is Valentine's Day, but so far we haven't seen much love from the markets for crypto, despite the hype from yesterday and despite all the excitement. I think, it didn't translate into people going, wow, that's a lot of great Super Bowl ads. Let me go buy Bitcoin now. It didn't happen.
That didn't happen. But going into Super Bowl, there was a lot of hype. FTX said they were going to give away whatever amount of Bitcoin was going to be given away at the time that they released their ad. It ended up being 754. So they're giving, I guess, out about 7.54 Bitcoin, which is over $300,000. But I think the ad that won the night for me was Coinbase and their QR code, which was brilliant in its simplicity. It contrasted against the glitz and the glamour of all the other ads. It made everyone engaged. Everyone reached for their phone, and it actually crashed the website. So we have a tweet here from Dan Elitzer saying the Coinbase Super Bowl ad fully captures the Coinbase experience, which is, sometimes.
Yeah, exactly.
Cumbersome. All right.
But normally those crashes happen at a time when you actually want to execute a trade. So this might have been a first for Coinbase.
People, a lot of volumes, a lot of user adoption. You get some problems, some growing pains. Super Bowl 56, also known as Crypto Bowl, for the number of crypto companies throwing ad money into the biggest rated event of the year, is now in the books, Lawrence. So if you didn't catch some of the ad action, here's a taste of what you missed.
I can't tell you everything, but if you want to make history, you got to call your own shots.
We going to the league. We going to the league. We going to the league.
Imagine a community where millions share ideas, trade stocks, crypto, and beyond.
To the moon?
In other words, eToro, the power of social investing.
Like I was saying, it's FTX. It's a safe and easy way to get into crypto.
I don't think so. And I'm never wrong about this stuff. Never.
Yes, joining us now to discuss is Paul Hibbert, consumer goods reporter at Adweek. Hello there, Paul. Thanks for joining us. So just off the bat, what do you think was the most effective crypto ad?
Most effective, I think, is FTX with Larry David. I think it sent a very interesting message of someone who's skeptical of it, who is complaining about everything. He's wrong about everything. I think the message went over well. It's this kind of self-deprecating and humorous way of going about it.
I wonder if he was doing those ads just because JB Smoove has been doing all those Caesars ads and he's just trying to catch up. But getting back to that point, who is actually getting reached with the Super Bowl? I mean, obviously, we have people who are watching the Super Bowl because they're genuinely interested in football, but it also attracts a lot of people who aren't. So exactly who's getting targeted here with and is an ad like FTX is going to necessarily resonate with that group of people who are just tuning in for the Super Bowl?
Yeah, well, I think obviously the Super Bowl is trying to appeal to as many people as possible. It's the most watched event of the year, and it's the only event I can think of where people are actually excited to watch the ads and they're paying attention. So, yeah, I think FTX, actually USA Today Ad Meter just released their data. They've been doing this for over 3 decades. FTX ranked 16 out of 64, which is near the top. And as it happens, Coinbase, a lot of people are talking about it. They love the QR code. Very interested
Everyone's
in it.
talking about it. That's what I mean.
But they are talking
it's
about
causing
it,
a lot of frustration, but they're talking about it.
Frustrating. But at the same time, I should note that again, USA Today Ad Meter ranks Coinbase was the very last most popular ad, 64 of 64. So I think that just shows the different audiences, the different people out there that are attracted to different kinds of messages. I think it was Coinbase. Very exciting in the ad world, very different. It's very bold. If you want to send the signal that you are not like everyone else, that's a great way to do it. But again, I don't know, the general public, I don't know if it resonated as much.
That Coinbase ad reminded me years ago of the E-Trade ad, where it was just a bunch of guys just sitting around and said, we just wasted $3 million. What's your excuse? It seemed like a lot of these ads had the future as a theme and fear of missing out. I mean, which has always been even at the end of that FTX ad, it was like, don't miss out. And it seems to be a lot of that. Why are they so similar in that regards? I mean, like, the LeBron James ad and FTX, there seems like this is the future and you're going to miss out on it if you don't join. Is there are they kind of stuck in this paradigm of how to put in that ad there, or is there something, a uniting factor? Well, what's the reason for that kind of similarity in that respects?
No, that's a great point. And I did notice that too. I think that my impression is just that it's still such a niche thing. The majority of people have heard about cryptocurrency. There's plenty of headlines about it, but I think last November, Pew Research Center said only about 16% of Americans have actually bought it, sold it, used it. So it's trying to apply a different set of persuasion. I guess it's just a different persuasion tactic. Like, if you don't get in on this now, you're going to miss out later. We're going to create the future. It's happening now. Take a chance, take a risk. There's some parallel, I think, with a lot of the sports betting ads of also just take a risk, make your own destiny. Is, again, like you mentioned, the Crypto.com LeBron James ad had a lot of similar arguments, similar reasons to get involved now.
What do you think is the significance of this moment from a mainstream perspective of, seeing all these crypto companies and being introduced to, new technologies, QR codes as a way of accessing these brands?
Well, I think that, again, just that the fact that no cryptocurrency exchange has ever run an ad in the Super Bowl until this year, suddenly have 4 of them. They're trying to, again, just reach the general public, expand their audience, expand the user base. Again, it's the most watched event of the year. It's the best place to do it. I think there's also when one brand will run an ad in the Super Bowl, I think there's also pressure that you also have to run an ad. And maybe there was a little bit of an arms race pressure why there were so many in there. But again, I think these names are just not familiar to the general public, even though they might be in different circles or different people on Twitter. I should also add too that Twitter also released data showing that the FTX tweet was the brand that got the most single retweets of the game. So there's saying something again of the community, and the people on Twitter seem to enjoy it a lot as well.
Well, they were giving out Bitcoin if you retweeted them, and of course, I'm guilty of retweeting them. So there you go.
Right, there you go.
So are these statements, though, effective long term? And like when we see spending like this, does it actually have a long term impact in the markets, or is it a signal that maybe this might be a top for an industry?
Oh, yeah, that's a good question. I don't know if I can answer that adequately. I think we'll have to see. And I think it's that running an ad in the Super Bowl is just also part of a bigger trend that we're seeing, where One market research company states that 2020, there was $16.9 million cryptocurrencies spent on advertising, and that jumped, I think, over 400% to 90 million in 2021. So the Super Bowl is just another aspect of that, I think, of trying to get the message out there. Whether that lasts or not, I think, I'm assuming there's going to be a lot more adoption. And like, as you mentioned at the top, that the Coinbase website crashed because there was just so much traffic, so much attention to the site. So I think people can get in, but I think they're going to need a reason to stay in, I think will be the next part of it. I think advertising can get you to sign up or buy the product, but if the product's not good or the service is terrible, people aren't going to last for long. So I think that's the most advertising can do, is get your attention and get you to try it out.
Yeah, I would just add to that, Super Bowl 2000 was regarded as the .com Super Bowl. More than a dozen new internet companies like eStamp.com and Pets.com bought ad space. And, there are some .coms that lasted and some that didn't. So, whether or not crypto companies will be a passing fad or here to stay, yet to be seen.
So yeah, the NFL, it's kind of had some, let's just say, shaky moments over the past couple of seasons. And it feels like there's maybe a decline in enthusiasm for it. Nonetheless, it's still very, very popular. But what do you think might end up either replacing it or drawing some of that attention away from the Super Bowl? For these companies to sort of look out into the future and say, okay, you know what, we got to appeal to a younger demographic, a different demographic. We should spend more elsewhere. Do you see that any competition for the NFL for Super Bowl on the horizon?
Yeah, definitely. Things like Twitch, just video game streaming, esports. It's been incredible over the past decade or two to see how much esports has become, again, not just niche, something off in the corner, but it's a mainstream event with a lot of viewers. So I could see a time where the biggest esports tournament of the year is competing for eyeballs with the Super Bowl. I think that's realistic, and that could happen. So again, with the proliferation of different services, different sites, people can spend their time on multiple different platforms. I think that the Super Bowl, I think it'll last. Of course, it's become more than just sports. It's become a cultural event. Again, talking a lot about advertising campaigns starting, and people actually wanting to watch the ads. But there are other mediums, there are other activities, I think, that will be up there one day.
All right, Paul, thanks for joining us. Appreciate your insights. That was Adweek consumer goods reporter Paul Hibbert. Coming up, crypto markets update with CoinList, a token sale platform for early stage crypto projects. Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XBX index currently at $42,471. Bitcoin sliding down about 0.1%. The CoinDesk Ether price ETX index is at 2,932. ETH also retreating almost 0.3%. The DFX CoinDesk's DeFi index is at 285. DeFi taking a step back about 3%. The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Mark Clerkin, he's head of trading at CoinList, which, as Christine just said, is a token platform for early stage crypto projects. Welcome, Mark. Good morning.
Thank you. Appreciate you guys having me on today.
Thank you for coming on. So what's happening right now? We saw Bitcoin pull back a little bit from its highs over the weekend, and yet we're seeing this sort of like it's just kind of sitting around 41 right now. Nothing exciting in ETH. Volumes are down compared to the year before, for instance. What's happening?
Yeah, you're right. As you know, we saw a peak for Bitcoin around 69,000 back in November. And since then, we've been on a steady decline. A few weeks ago, we saw a little bit of capitulation and expanded volume in selling, and finally found support around the 33,000 level. Since then, we've rallied and come up into the mid 40s now. And that rally happened relatively quickly and kind of got out of ahead of itself. And so now you've seen just a little bit of a pullback. But today, with the market starting to catch a bid, I think we'll continue to see a reduction in volatility, kind of decrease range, and then continue to just catch a bid and slowly work our way up from here.
You mentioned the lower volatility. I went back and for my piece this weekend, I looked at volumes compared to a year ago, and I noticed that while Bitcoin is roughly trading where it was last year, the volumes are tremendously lower. And my question is, does that open itself up actually with institutional players coming on board? The potential of BlackRock offering it on their Aladdin platform, et cetera. Does that actually open it up to more volatility coming up if you have a few big players start to pump into the market either direction, and a market that just can't absorb those kind of trades anymore? Or do you think that volatility will stay low for the foreseeable future?
Well, that's a good question. And I do agree. We have seen spot volumes decline, especially relative to last year. But what I think is happening here is you're starting to see more transactions occur away from exchanges. So whether that's OTC desks like we have at CoinList, or whether it's through derivatives such as options, people and professionals are starting to express their market opinions in ways other than just through spot instruments. And so I think that's led to a decline in spot for the time being. Now, whether that'll impact volatility going forward or not is to be determined. But again, I don't think the volume has actually dried up. I just think it's gone elsewhere.
With all this attention from the crypto bowl, from the Super Bowl, there was a lot of eyeballs on crypto companies, and one would have thought that may have provided a tiny boost to the markets, but then it actually went backwards. So I wonder, do you think that we'll see a boost from mass adoption or this kind of retail investor attraction?
I hope so. I think it was really fun to watch the Super Bowl last night and see multiple companies, representing their brands and trying to grow the industry. Obviously, FTX with Larry David, that was an excellent and amazing commercial. Coinbase, I thought their commercial was awesome too, despite the rankings and the subsequent errors that occurred. Really, I honestly think more and more what you're seeing is just continued broadening of the awareness of crypto and continuing to educate the users so that way they're comfortable in order to be able to invest and partake in this market.
So now crypto, of course, is more than just Bitcoin and more than just ETH. It's also the alts, and you guys deal with a lot of newly listed cryptocurrencies. What's your take on where the alts are right now and how you divide them, the layer ones and the likes and the DeFi? How are you? Where would you focus your assets right now if you were an investor?
One big theme that we're really seeing a lot of currently is interoperability. So whether that's Cosmos or Polkadot or other chains that are really focused on the ability to have interoperability across blockchains. So I think that's going to be a theme that we continue to see throughout the year, and one that I would lean into personally myself.
Do you see alts and cryptocurrencies at large perhaps correlating with the traditional equities, or do you see it taking off on its own at some point in the near future?
I would hope that eventually that they do decouple, but currently I think traders have kind of lumped crypto into the risk-on basket of assets. So, despite Bitcoin being an excellent hedge, or at least theoretically designed to hedge against inflation, we've seen the sell-off as rates have started to rise and we start to think about tapering. I don't think that's actually an inflation-driven narrative. I think that's a risk-driven narrative. And so for the time being, that's how crypto is viewed. But over time, I'd like to see it be more fundamentally driven and decouple from, just traditional equity markets. But I think we still have a little ways to go before that'll happen.
All right, great. Thank you, Mark. That was CoinList Head of Trading, Mark Clerkin. Coming up, how you can give donations and support our Olympic athletes in U.S. in figure skating through crypto. Also checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day.
And welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter, which you should all subscribe to. Good morning, Nick. Happy Monday.
Good morning. How'd you enjoy the game?
Hey, the ending not good. Not a good ending. Not the way I wanted it to go. Yeah. And I'm sorry to my bookie right now. So Capitol Hill, down in DC, they're going to be having a hearing on what happened at Bitfinex, our favorite exchange. They had obviously the hack and a few years ago, and now there seems to be a recovery of 90,000 Bitcoin. So what's going on there?
Yeah, so today, the DC District Court will be having a hearing with the two alleged suspects who behind the laundering of some 25,000 of the Bitcoin stolen from Bitfinex in 2016, as well as, they had possession of the 94,000 that were recovered last week. Don't have a lot of details yet. The DC District Court stayed basically a release on bail at the last minute last week. And on Friday or Thursday, released some more details saying that they're concerned that the two defendants, Razal Khan and Ilya Lichtenstein, were flight risks. So I imagine we'll probably be hearing more about, this evidence or these allegations, at least, that were presented on Thursday, as well as, see whether or not there is going to be any kind of release on bail, whether or not they're going to be sentenced to, just stay in prison while they await for a proper trial, as well as possibly, whether or not they're even going to plead guilty or innocent.
Yeah, it'll be interesting to see. I mean, look, Razal Khan, I did buy all of her catalog. I listened to it the entire week, and it is actually a fantastic social commentary, which I recommend at least reading her lyrics. But this idea that they're flight risks, I mean, it sort of implies that at least that they're not fully cooperating with authorities on this. Is that correct? Is that what that implies, or are they just saying that?
It's partly that. According to the document published by the court, during the initial hearing, or not the initial hearing, but during the raid when federal agents were searching their apartment, beyond the suspect, let's say, pieces of evidence, including, the bag of burner phones, the document of how to get a passport, reportedly, Razal Khan herself, Heather Morgan, tried to lock her phone or encrypt her phone under the guise of getting her cat. Federal agents, said she has to get her cat. Federal agents said okay. She instead grabbed her phone, tried just putting wrong password in to possibly encrypt it. So that was one of the pieces of evidence that the court cited. Also, there was this fact that apparently the two had made plans to actually go to Ukraine and either remain there or use that as a kind of staging base before they went to another country. And this part seems to be kind of even more so as far as compelling evidence for the court that if they're allowed to go free, then the two will leave the country.
Yeah,
for her rap career, that's the most gangster That's the most gangster street cred anyone could ever get.
This is very true. We also have a CoinDesk reporter down in DC to be at the hearing, so we'll have the latest reporting on CoinDesk.com. Also in DC, stable coin hearings continued, right, Nick?
Yeah, so tomorrow the Senate Banking Committee will be holding a hearing on the President's Working Group report on stablecoins. This will follow last week's House Financial Services Committee hearing. And, I still don't think we're going to see any specific legislation proposed. We're not going to be hearing about, explicit proposals. But this is going to be another step in the process of, getting lawmakers not only up to speed on this issue, but also kind of framing out where they see the holes right now, where they want to see legislation address, as well as possibly see what regulators themselves are looking for. And I imagine all of this will sooner or later lead to some more specific proposals on how to legislate around stablecoins.
Awesome. Thanks for the update, Nick. That was CoinDesk managing editor of Global Policy and Regulation, Nick Day, and sign up for that newsletter of his, The State of Crypto, on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
So, Lawrence, how about those Olympics?
Loving it.
Kind of just right after the Super Bowl, we dive right into that. And I'm a fan of, immediately, the bobsledding. I'm a fan of gold medalist Nathan Chen. And if you want to support U.S. figure skating, they're accepting crypto donations. Joining us now is Chris Kniram at U.S. Figure Skating and Given co-founder James Lawrence. Welcome, Chris and James, to the show. So tell us, how can crypto help U.S. figure skaters? And James, maybe you can talk about how Given works.
Excellent. Well, thanks for having me. And we're so excited to be supporting U.S. figure skating, and they're incredible athletes. And of course, we're all so proud of what Nathan Chen has done. And crypto, as we've just heard in the last story, can has some nefarious discussions and things that have happened. But you can also use Bitcoin for doing a lot of good and supporting U.S. figure skating, their athletes, their destination Beijing, which really helps bring the athletes and their families together at the Winter Games. It's a powerful way to kind of deploy some of your crypto assets for good. And so we're thrilled to partner with U.S. Figure Skating, and we hope that kind of the general crypto population wants to dive in and do some good with their crypto holdings.
So good morning, Chris, and good morning, James. Who gets the money? Who gets how is it allocated? Do coaches get anything? And how can we see and keep track of how it's allocated?
Good morning, guys. Thanks for having me. So what happens is these donations, they go through, Bitcoin or through Given, and U.S. Figure Skating uses those to help families. At least in 2018, when I went to the Olympics, it was one of the only reasons actually that my family was able to travel to Korea and watch my wife Alexa and I at the Olympics. So it goes a long way for a lot of families that maybe can't afford to send their family over to a big country. But this time for Beijing, U.S. Figure Skating put on a couple different viewing parties and invited a lot of the athletes' families to join them, and all of us together watched the team event and could do that together as a big group to support all of the athletes.
Chris, you mentioned that how expensive it is, and for younger players, figure skating is a very expensive sport. So, what are you doing to make it more accessible for communities that are, let's say, underrepresented in figure skating? How does this help? Does it help?
It helps a lot. Yeah, every athlete that goes to an Olympics, they're allocated a certain amount of funding to help their families pay for tickets and reserve hotel rooms. U.S. Figure Skating goes a long way in helping a lot of the athletes' families, regardless of where they live or where they're from.
I understand the costs are extraordinary. I mean, athletes have to pay for the coaches, the expenses, the constant traveling. So I wonder, how does this go to that as well? I mean, I understand it goes to Destination Beijing, one of the projects that you guys are doing where family and friends can get together and watch and celebrate these major international competitions. But how about like the training, and would that prevent certain athletes from leaving and representing other countries?
This funding helps the athletes' families, but the athletes, fortunately, they have their flights and everything paid for through the USOC, so they don't really have to worry about that when they go to the Olympics. It's mainly for the athletes to have their family members there at the Olympic Games to watch them. And for this, obviously with COVID and everything that's been going on, this situation. There's been a few viewing parties around the country that the families, and U.S. Figure Skating has paid for the families to come to the viewing party and paid for their hotels to have them all together to watch their athletes.
So James, getting back to the question I asked earlier about allocations and keeping track of it, is there a way in which donors can follow their money, if you will? I mean, that's one of the benefits of crypto, is that it has this incredible amount of transparency. Can it also happen here as well? Can we see our money get put to work?
I think it really depends on the organization that you're giving to. Crypto does have a lot of transparency. It also has a lot of anonymity. And I think with regard to how we work with charities, we put our charities through a pretty rigorous compliance and KYC AML process so that they're protected, the donor's protected. And the donor really needs to be trusting the organization that they're giving to in the first place. So from a tracking standpoint, certainly we provide the tax documents and whatnot that are associated with giving in the United States. But I think it really comes down to crypto being a unique asset, but it is still an asset that's donated. And I think the organizations really have to consider making sure that they're providing all the right documentation, all the right communications to their donors so that they feel comfortable.
Chris, we can't let you go without asking, of course, what's going on right now in Beijing with other countries, not the U.S., where it seems that their figure skaters might have taken some things they shouldn't have done. How is that affecting Team USA? Is it hurting morale? Is it hurting enthusiasm in the stance? Is it hurting enthusiasm among the skaters? I mean, any chance you guys know how they're feeling at the moment?
I talk to Alexa every day, and it's not hurting anyone's morale. Everyone's there to do their job. They trained 4 years for this. So unfortunately, Team USA has not gotten their team medal yet, so that's yet to be seen what's going to happen with that. But past that, everyone's in a good place. Everyone's training hard and ready to go for their individual events.
All right. Well, we wish good luck to Team USA and the rest of the athletes at the Olympics. All right. Thank you, Chris and James. Thanks so much for joining us. That was Chris Kneinman. Mess up that name. U.S. Figure Skating and Given co-founder James Lawrence. Let's check in with crypto Twitter for our tweet of the day. This one from Zach Vol, the Super Bowl. Boomers getting a crypto education and Zoomers getting a music education. A good kind of summary of last night. That's it for First Mover. Thank you, Lawrence Lewitton. I'm your host, Christine Lee. Join us at noon for The Hash and all about Bitcoin with me at 3 o'clock Eastern. You're watching CoinDesk TV. Also next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
It is Valentine's Day and some NFT lovin' is in the air. Welcome to the Daily Forecast, February 14th, 2022. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Well, roses, chocolates, or a romantic meal might be a traditional way to celebrate Valentine's Day. But how about an NFT artwork generated by auction data instead? It's the 21st century after all. We're going to take a look at that and a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's take a look at some of the top stories from around the Asia-Pacific region today. In a first for the country, a South Korean university is to issue NFT graduation certificates. Now, Samsung-backed Sungkyun Kwon University says its NFT certificates can be used as official proof of graduation without the risk of losing the original or forgery. However, not all of their graduates will benefit as yet. Just 3 NFT certificates are to be handed out this Wednesday to students who have won in-school competitions. Now, according to Yonhap, the university plans to adopt blockchain technology for various kinds of certificates in an effort to enhance administrative efficiency. And that is good news for anyone who has ever had to dig up paper proof from our college days. I won't tell you how long ago that was. Over in China, 2 huge names plan to work together to develop operating systems for artificial intelligence or AI chips. Crypto mining rig manufacturer Canaan will partner with tech giant Alibaba on the project. Although China has banned the crypto mining industry, Canaan is still actively expanding its chip business in the country. Its Kendrite series chips, for example, are used in fields including robotics and facial recognition. But while development in the chip field continues, according to the U.S. Commerce Department, the global semiconductor shortage is still very much an issue, with demand far outstripping supply. And you can find those stories and more at forecast.news. And of course, it's Valentine's Day today, and what better way to show affection for your sweetheart than with an NFT, of course. Auction house Phillips is getting in on the action with its Japanese-inspired My Kawaii Valentine sale, including 1 NFT piece that will be generated in part by the auction data. Forecast's Timmy Shen has more on how that will all work.
For those who are more traditional, the My Kawaii Valentine collection features physical paintings and prints, but it's also moving with the times by including 6 NFT works of art. They include creations by a number of Asia-based artists like Lily Tay and Pom Chan, both based in Bangkok. Meanwhile, one artwork is to be created during the course of the auction by a virtual metahuman influencer and artist named Monarch. Developed by Hong Kong-based Gusto Collective, Monarch will generate an NFT called Drowning in Love using data created by the auction process.
Every time someone clicks on the website, every time somebody look at a piece of work, every bid that comes in, the bid amount over the base fee are all the data points that we would collect.
Monarch will use a minimum of 100,000 data points to optimize the NFT in a video form. As Lau says, similar auctions in the past have generated at least that much data. He also says it adds a twist to the auction.
The investors now become not just a spectator in collecting art. He or she becomes a participator in the creation of art, and that's the uniqueness of it.
Phillips says Bitcoin and Ethereum will both be payment options in addition to Hong Kong dollars when buying one of the 6 NFTs. So it's a chance to show your love in anything but the old-fashioned way. For Forecast, I'm Timmy Shan. Well,
Coinbase is a huge name among crypto exchanges, but when it comes to going for an IPO last April, well, it went old school, choosing to list on the NASDAQ. But its stock price took a dive in January this year, and it remains below its IPO reference price of $250. So, what went wrong? Was it the decision to list on a traditional stock exchange rather than on a digital exchange maybe, or even on its own exchange? And who better to ask than someone with a passion to tokenize the world? Henry Chung, CEO of Fusang. Fusang aims to reshape investment markets with blockchain technology. And Henry, it's always great to have you, but this is a conundrum with Coinbase.
Yes, always great to be here, Angie. And I think it's interesting that you talk about Coinbase because I think they listed in the wrong place. Coinbase's mission has always been to make it as easy as possible to buy Bitcoin. And they've got tens of millions of users who come use their app mobile, and they want to interact with digital assets, blockchain-based tokens. And that's why the company's worth so many billions in the first place. That's why everyone was so excited about finally being able to actually invest into the company. But then they listed on NASDAQ, a very traditional exchange, where they not only had paper shares pop out the other end, but you have to go and open a traditional brokerage account to go buy those shares, and you can't do it through Coinbase. And I think that's just a very jarring customer experience. On the flip side, if Coinbase could have opened up their shares, their tokens, either directly to their own user base or maybe through exchanges like Fusang, and allowed their own user base to not only buy those tokens directly, but buy it in a digital format with blockchain-based tokens, I think they would be worth double.
You know, it really is the platform these days. In the 21st century, the platform is your audience. And that really kind of ties into the valuation models in traditional capital markets that really relies on historical earnings as well. The digital marketplace is dependent on future valuations, not even the future expectation of what those value of those shares are. Do you think that this is creating something of a mismatch in capital allocation when it comes to this?
I think that the real issue is that, well, you know, crypto markets, ICOs, utility tokens, they have been forced to find what I call alternative value drivers. They can't point to some kind of underlying equity value or value from being a real security. So the only value that they can create is by capturing a network effect, by capturing the value of a platform, as you say. And this is the reason why these platforms are so valuable in the first place, and why people always get so excited about the opportunity to invest in them. And again, if you could just actually issue your own shares as a blockchain-based token and offer it potentially through your own platform, but more importantly, to your own stakeholder base, the people who already use your platform, who would like it enough to pay you money, the very reason why your company is where it is today, if you can turn those people from stakeholders into shareholders, and you can combine not only the token value that people have today, but also the actual underlying equity value, then I think you have something quite interesting.
And what role do you give special purpose acquisition companies, or SPACs, better known as SPACs? How do SPACs play in all of this? They're seen as a traditional market's answer to an ICO or security token. Are they the reason security tokens haven't quite taken off yet? What's the contrast here?
I think that the SPAC trend that we're seeing in traditional capital markets is really, really important, because it just goes to show that the same access benefits that people look for when they buy into an ICO, that same feeling like as a retail investor, I am somehow cut out of the juiciest parts of traditional capital markets. And the fact that people are willing to invest into what is effectively a blind pool of capital, right? Both SPACs and ICOs, I'm effectively investing off a white paper. I don't really know what I'm buying into, but I'm so hungry and desperate to get access to exciting investments that I couldn't before, that I'll use this as the only route. And quite frankly, all of these factors, right? The need for access, and I guess combined with the fact that in the crypto world, I hear a lot of complaining. A lot of people say, well, we can't issue real securities because of regulation or legal reasons. I honestly think all of that is nonsense. And you can issue tokens based on real equity, real shares, and you can do it today.
That is tokenomics at work right there. Henry Chung of Fusang, thanks so much for joining us today. And that's the daily forecast from us right here in Asia, to you wherever you may be. For more, visit forecast.news. I'm Forecast Editor-in-Chief Angie Lau. Until next time.